Right, the trading has moved into the final half an hour. Let's talk markets and what will happen in the near term, because the rally's completely fizzled out. For the Nifty, it's what, 671, so that's almost a 330 point drop. Without much ado, let's get in our experts. Hadrien Mendonca of IIFL joins us right now on the charts. In a bit, Mayuresh, Joshi of Angel will be joining in to talk about the fundamentals as well. Hadrien, let's start off with you, and Jai Bala, of course, also with us, okay, of Cash the Chaos. So Hadrien, let's start off with you. Thanks for joining in. Quick thoughts first on the trade. What do you do now?
So right now it is definitely booking some profits, taking some money off the table.
What if there is losses and not profits?
If you have losses, you have no option but to take those losses and actually sit, because we are definitely going to see some kind of consolidation. The move in the past 7-8 trading sessions has been incredible, no doubt about it. There is a lot already factored in. So definitely we are seeing some kind of extended levels of profit booking coming in. One thing that I would want to bring to your notice is that we have seen a negative RSI divergence, which we've not seen for quite a long time, and with such a huge event unfolding in front of us, and market still not managing to sustain at the all-time high levels, is something very important to take notice of. So the RSI divergence that we are seeing, it's not only on the Nifty and the Bank Nifty, but it is also on SBI, ICICI Bank, Axis Bank, HDFC Bank, HDFC Limited. So all these big names are seeing the same negative divergence. That's the reason we are seeing a lot of profit booking. So I think this can get extended a little further. Overall, I'm not at all afraid of this short-term profit booking. The trend is definitely very strong. 6-8 months down the line, we'll definitely see Nifty surpassing the 13,000 mark as well. So
mandi hai ki teji hai?
Short-term mandi hai, long-term definitely teji hai.
Okay.
Actually, SBI, I think, was Ramdev's big bet when he spoke to you. He said that's going to be the next long-term leader in the pack. It's pretty
let's see.
Strongly bent towards it.
But that certainly is, and that stock is still holding out, but let's wait and watch. Jai Bala is here. Jai Bala, your thoughts on this pull back that we've seen, and what would you advise in terms of a trade?
Good afternoon, Neeraj. There's a very important part of place we are in the market. The markets are in the very last leg of this bull market, and I'm talking about the medium to long term, not the short term. So I've been projecting 12,200 to 12,400 for several months now. If you go back to people who you pointed out in BQ Edge as calling this market to go to record highs. I've even called the market to record highs even before that. So I'm very conscious about what I'm saying. So for people who are invested in these markets from 2016 or even from 2009, you are here to take cash, raise cash. You should go at least to 50% cash at current levels, and the markets are probably having a couple of weeks, or at the very best case, a couple of months. So we are in the last stage of this bull market, and the markets are very close to topping out. And there's just one piece of puzzle that's missing for the market to top out. I'll mention it when that happens. I don't want to say it now because my research is proprietary, so I don't want to say that now. So I'll be robbing my institutional clients of that, the edge that they will get. So I'll talk about it after that. I've alerted them when that event has actually happened. So the best strategy here is to raise cash, and we should have a complete change of mentality. Earlier the markets used to go down and come back. That strategy has to be dropped. You have to wear a trader's hat, and you have to be very strict about your stops. If you're having any positions, if stops are hit, take the losses. You will regret it later if you don't do that.
All right, Jay. That's a quick take on the index, getting a little bit more defensive in his approach, saying it's better to sit on cash for some time. What about stocks then, Jai Bala?
Yeah. See, as we speak, Infosys is looking like it's clocking a double top, and in the middle of April it went to about 770 and change, and and now it's come below the secondary trough low of about 705, and it looks like it's going to close below that. And if my indications are correct, if this pattern is going to play out, I think it can drop somewhere close to 630 from a positional point of view, not from an intraday point of view. So if we just have another 22 minutes for the markets to close, and it looks like it wants to close below that, and you're better off initially, probably going for a just slight out of the money put on this if you don't want to go straight on the future short. So I think Infosys is dropping to 630. And if you look at the broader market as such, many Adrian had pointed about negative divergence. I think Reliance is also looking like it's topped out for the medium to long term. Back in 2015, when it was about 800, 900, I told investors to accumulate Reliance. It's heading for 1700. And I also pointed out using Bloomberg data that the number of institutional investors who are exposed to Reliance was just about 3%. And I also pointed out that when it crosses 1700, that's when the institutional investors will get inside the market. So the levels I'm talking about is before adjustment of bonus. So 1700 is actually 800 850 adjusted for bonus. So and at projected level of 2300, Reliance has come to 1400, which is equivalent of 2800 pre-adjusted bonus price. So and from that level, clocking 1412, it's also coming lower. So use this opportunity to book profits in Reliance. If the markets are going to prove wrong, it needs to take out 1418, and again raise cash in Reliance. It's not looking attractive at current levels.
Book profits in Reliance if you have any, and go short on Infy. The call coming in on Jai Bala. I just want to pull up the turnover. By the way, the cash turnover today is already 48,000 crores. So the fall that you're seeing is coming on account of high participation on the cash side. We don't know whether it's cash-based selling which has taken place. But remember, on Monday when the markets had gone up after exit poll, the cash turnover had also picked up because the derivatives turnover for the last 4 days has been muted. Hadrien, very quickly, any stock-specific ideas do you have right now?
Yeah, absolutely. I'll go with an index heavyweight, and that's an SDFC Bank. The reason only is that the negative RSI divergence that I already spoke about on the heavyweight. I'd recommend going short on SDFC Bank May futures in a short term, keeping a target of 2280, placing a stop loss at 2345.
Okay, that's a short call on HDFC Bank. It's down almost over 3%. Remember, this was one of the stock which also contributed to the gains that Nifty had seen to those levels of 12,000. Let's bring in our fundamental expert then. Mayuresh Joshi of Angel Broking joins us on the show. Hi, Mayuresh. Good afternoon. Well, the verdict is looking good, but the markets have sold into that verdict now after touching all-time high levels. What's your assessment with the trading activity that we've seen today?
Afternoon, Navneet. No, I think so. The market has clearly given a thumbs up, at least at the beginning of the trade, because the validation in terms of the actual numbers with the exit polls did match for a change this time round. Now, I think the markets are trying to get a little bit cognizant here of what happens next. So I think as this government comes back to power and what they've probably promised in the manifesto, including doubling of farm income over the next 2 years, 3 years, the expenditure of 1 lakh crore that they're probably doing on infrastructure, and how they're going to balance that out, specifically in the sense of the fiscal numbers. So I think fiscal slippage is going to be extremely critical here. The 100-day agenda that they probably put out and the budget thereof over the next few months are going to be extremely critical from a market perspective. Again, I think a lot of positives were getting priced into the market at higher levels. And again, that was not probably getting aided by corporate earnings growth. So I think the markets will now again start reverting back to the core fundamentals, how corporate earnings are expected to grow. And we'll be looking more global at this point of time, because with this mandate, again, I think the next 5 years from a political stability is far more or less secured in terms of reform processes. I think that's what we'll come to know over the next few months as well. But I think the reform processes should be on track. I think it's the corporate earnings perspective and the global backdrop, crude, recessionary factors, Brexit, US-China. I think that might have some amount of an implication from an immediate short-term perspective. But I don't see a deep correction into the market. I think 11,000, 11,100 levels should hold out unless something awfully goes along globally at this point of time.
Let's pull up the India VIX as well. I think today is quite a monumentous day for India VIX, which is down 30%, 19.6 is where it's trading at. Remember, in the morning it was somewhere close to 27, and we were talking about how the election volatility in the past has led to India VIX rising closer to 36, 37. That's come off quite dramatically in intraday trade today, and even after the index has fallen so sharply, you're not really seeing much of a change on India VIX, which stands to be under by about 30% and has held that ground there as well.
A few stocks that are falling like 9 pence, and I just want Hadrien's view on those. Hadrien, 2 names, and I would also want a fundamental view on Sterlite Tech, but technically, Eicher Motors and Sterlite Technologies, which is now sub 150.
Yeah, so Sterlite Technology is looking pretty weak currently, and if you look at the weekly charts, it is actually very well settled into an unfortunate lower top lower bottom structure, which is not a good thing. So long buyers would really not want to see this thing happening with Sterlite Technology, because unfortunately it is. So it would be advisable to just stay away. If somebody is wanting to create fresh positions, please do not, because the structure continues to remain weak. For Eicher Motors, I think I am seeing a bearish engulfing pattern on the charts, and the stock is unable to surpass its 100-day moving average. It is also cracked below its 50-day moving average. So all these parameters are once again indicating that the Eicher's move that we've seen in the past 5-6 trading session is slowly coming to an end, and again it is resuming its lower top lower bottom structure. I think one should be careful even on an Eicher Motors.
IndusInd Bank, Neeraj, that one too is holding steady ground. Yesterday it was up about 5% post its numbers.
And today started off well and is still holding up about 5%.
Yeah.
By the way, the Bharat Financial stock as well is holding fort pretty well. But and that's a 2 up 5%. But as I said, I just wanted that fundamental view on Sterlite Tech from Mayuresh Joshi as well. Mayuresh, the stock has been just taken to the cleaners, 400 to sub 150. The management is saying that growth is still steady and all. Stocks don't sell off like this if everything is hunky-dory.
No, again, I think, Neeraj, a couple of concerns that are probably emanating from the Chinese market itself, and this has obviously got validated. But what we are probably hearing is that the Chinese demand, specifically in terms of the fiber optic requirements, has actually come down from 300 million odd fiber kilometers to 220, 230 odd million fiber kilometers. Now, what this does is it probably creates a downward pressure in terms of fiber pricing. So spot prices of fiber, which were almost around $10, $11 a fiber kilometer, they've actually crashed down quite significantly. So I think all the expansions that Sterlite Tech is doing, I think if this is the demand scenario and the expectations of pricing probably staying on the downward trajectory, I think you're probably expected to see an earnings hit probably come through. So I think these are some concerns that are probably getting played out. And obviously, I think the pledge concern always stays with this stock.
Okay, if you could just pull up the Dow futures. I don't know how much of the sell-off is related to what's happening globally. We just marked European market indices are down, and the Dow futures are currently down over 200 points, almost 1% cut seen there. Remember, there are concerns with regard to trade war, and we've seen a sell-off coming in globally. But one pocket, I think, back home, which is outperforming, even when Nifty's fallen about 100 to 120 points, we're inching very closer to that 11,600 mark. It's gyrated nearly over 400 points. Now, that's Shree Cement and Ramco Cement. Both the stocks still now are seeing some bit of gains. In fact, both of them have seen gains of between 3 to 3.5%. Hadrien, I know Shree Cement has been trading around its all-time high levels, but would you take a bet on any of them, considering they're outperforming the market today?
No, I think I would not take a bet, because what we are again witnessing, Shree Cement, is a hanging man pattern after a very, very strong up move. And if you've noticed today's volumes, volume along with the hanging man pattern is not something good, because we are seeing a little bit of money being taken off the table near its all-time highs. So I think in the short term, again, we could see Shree Cements coming lower as well.
All right. IndusInd Bank and L&T, two strong performers. Today, as well as over the last few days, have been consistently gaining. Are these buys according to you?
Yeah, absolutely. If you have a 6 to 8 month perspective, definitely these are good buys, especially IndusInd Bank. The structural breakdown that we saw post the results, and that whipsaw move that we witnessed, I think that is slowly coming to an end. It is once again entering into that the positive structure which it was in. So I think IndusInd Bank is definitely a good buy. L&T is another very strong buyer around these levels. I'm really hoping we see L&T close above the 1450 mark. That's very important breakout zone. Which L&T has broken out above. I think on the upside, 1600, 1650 cannot be ruled out if you have a 6 to 8 months perspective.
Mind you, tomorrow, by the way, it's an interesting day of trade tomorrow. I think this is return to normalcy. Maybe in the morning we marked about how Asia was anyways looking very, very wobbly, and therefore we would have danced to only our own tunes. I don't know if this is just a return to normalcy and therefore taking cognizance of what the world markets are doing, or otherwise. Tomorrow's an important day. A lot of very crucial results come out. Consumption space marked by Page Industries. I think Ashok Leyland comes out with numbers. Nagarjuna Construction from the infrastructure space comes out with numbers. So a lot of important names to watch out for in the session tomorrow. And if it's indeed back to normalcy and what the markets do, then I think individual companies which will give either poor numbers or otherwise would be in focus. Mayuresh, two companies which will be suspected to come out with slightly weak numbers, looking at all that's happening in consumption and autos, Leyland and Page. What do you do here?
We need to wait it out, Neeraj, because on both counts, I think you're expected to see some amount of revival probably happen in the second half. Leyland, for example, I think the kind of pain that has gone through, I think the numbers should be quite decent because LCVs have still held up, the tipper sales have still held up. You're seeing some amount of price increases also taking place. But again, I think there has been several discounting factors, at least for the higher tonnage vehicles at this point of time. The pre-buying will probably start happening in the second half itself. Though there is some element of sluggishness that can probably come through the next 2 quarters reported numbers. For Page, again, I think the demand dynamics are going to be extremely critical. The second element obviously is the market share itself. So I think the market size is improving at a very good pace in terms of the innerwear market. But what probably happens in terms of the positioning of Page, yes, they are exclusively opening up EBOs. The kind of distribution network specifically in terms of retail distributors are also pretty high at this point of time. But again, the volume growth is going to be extremely critical. And what we've probably seen in terms of sluggishness reported by a lot of consumption companies, I think that sluggishness might just get seeped into the reported numbers as well. So I think second half is somewhere where the revival hopes are probably pinned at this point of time. And valuations, again, I would say are quite fair at this juncture. So I think you have to wait it out for the results and probably for the stocks to correct.
Would you sell the auto ancillaries, Mayuresh? Numbers have been disappointing. Sounds a few that have done relatively okay. Timken, for one, had a decent set of numbers. I wonder what Timken's doing actually today. Was up about 20% in the session, opened 10% higher today, but right now just about flat at 675. But for the rest of the pack, it's not been a very encouraging quarter, and probably the next few quarters will be a mirror image of what we've seen in this quarter. What would you do with these names?
So again, David, afternoon. It's going to be some reflection in terms of how the OEMs probably operate, and if the OEMs are going to have a tough and sluggish time in terms of reported numbers, I think the auto anchors are going to have a tough time as well. I think there have been a few exceptions in terms of reported numbers, but I think it's a two-pronged painful period for these companies as well. I think the dependence on OEMs will clearly drag down or offset the kind of gains that they probably do in the replacement markets. The second element obviously is also going to be the pricing pressure. So again, I think input costs are probably higher over the past few quarters. Even if they stabilize, I think with lowering demand, I think to push through prices, I think it's going to be extremely difficult for these players. So I think volumes are going to be sluggish. If volumes are sluggish and if there is no pricing on their side, even on the replacement market, you're probably expected to see the OEM set off happen on the replacement front. At the same time, I think the compounded earnings story might just remain stagnated over the next few quarters as well. So I think it's a tough time for auto anchors as well. So I think it's better to wait it out and wait for declines. I think wait for qualitative stocks within the space itself, but not buying into any auto anchors at least at this point of time.
Okay. Let's try and take closing strategies from our experts. Jai Bala, to you first. You already said that if people had some longs in Reliance, they should take it off. So that is one thing for somebody who has a position. Let's try and give a BTST or an STBT, whatever the case may be. For somebody who doesn't have a position and wants to create a fresh position, what is your top idea?
Yeah, see, the strongest at this point that's defending this market is actually financials. So if you got to be in anything, you got to be in financials. And last week when he spoke before the results, I spoken about State Bank of India, on which I had a call strategy, and also I mentioned about Bank of Baroda. And Bank of Baroda, is looking okay. But the problem is most of the frontline names are, looking a bit, toppish, definitely for the short term, and probably a little more juice for the slightly higher time frame. So with that in mind, you be conscious that you are taking some amount of risk. So have a strategy to limit your risk. So with that in mind, go long on Bank of Baroda at current levels about 127, and keep a stop below 125. And expect it to open in next session somewhere close to 130.
Hadrien?
Yeah, I'll go with another short position, and this time I'm going with a metal name. We have been bearish on the metals since past 2 to 3 weeks now, post that breakdown that we saw, and Hindustan Zinc is the name that I'm really feeling that we could see further more decline going forward. We have seen again a structural breakout, this time on the daily charts. Initial stages where one can enter and sell Hindustan Zinc May futures. I think we are expecting a target of 240 on the downside, keeping a strict stop loss at 253.
Okay, that's a sell call coming in on Hindustan Zinc from Hadrien. Mayuresh, talking about the discretionary, I know we've spoken to you about the autos, but considering now that we have a stable government, do you expect some sort of stimulus to come by for the rural economy? Because I think it didn't flow in properly because of the model code of conduct, which was kicked in due to elections. So now we're out of that. Considering if there is more liquidity in the rural economy, do you see these stocks doing well going ahead? Something like HUL or anything from the FMCG pack?
No, so again, I think it's a couple of factors that you need to probably watch out for. I think the stimulus that you're probably talking about, I think a part of it was paid out. So I think the kind of promise that they have done, they will probably deliver on that, but they also have to properly balance the fiscal part of it. So they cannot go excessively spending on the rural economy at this point of time, when you probably needed to balance out your fiscal and current account deficits. The second element obviously is how the monsoons will fare. So I think if the monsoons are close to normal or close to the long-term averages, as both the forecasters have put through, I think there would be a reasonable amount of belief that the second half, as the output starts coming into the market, along with the payouts that the government will do through the direct benefit transfer window, that will probably start aiding consumption. So yes, I think the second half is where I think the hope probably gets built in, based on these two factors, that the volume-led price growth can create the necessary leverage on FMCG stroke stable balance sheets. So yes, being selective here, but I think stocks like Dabur probably look very, very interesting over a longer period of time.
Okay, just before we start wrapping up the markets, Hadrien, Mendonca Z Entertainment is trading at the day's highs.
Yeah, interestingly, it's holding out, and the stock is actually showing very good strength despite the overall sell-off that we are seeing. The stock has definitely created a higher top on the daily charts, which is actually indicating that it is trying to build a base. So going forward, one can also consider a BTST on Z, wherein we could see levels of 375, 380 in the near term.
Okay, that's Z for you. The other one obviously being Dish TV. Probably had a slightly more patchy ride up until now in tandem with what Z has been doing, but from levels of 35 it was swift enough to go sub 30. Now just about around 30.4 is where it's trading at. Jai Bala, do you track Dish TV?
I don't track that closely, but the media stocks are always in this sort of a move. And Dish TV in particular is not the best move, but as long as it can stay above 25.73 or 25.7, I think that will be a good point for it to bounce. I think it's got potential to go past 42, but I don't know if this market will be conducive enough for the stock to go up. But anyone who's long should hold with the stop below 25.7. And for intermediate targets close to 35, and if it just were to sustain above that, probably the next level is 42.
Wrapping up the markets for the benefit of our viewers, and 3.5 minutes left to close. Important day of trade. We're ending in the red. In a manner of speaking, this is history, because until now, in the last preceding elections, on the election day, we've not had negative returns. We will have negative returns today. So in a manner of speaking, this is a bit of a history in the making of sorts. 5 days, so the sample size is not that large, but nevertheless, I do think, though, this is not a reflection of anything else but for the fact that the markets had already priced in this in the preceding 2 days of the last week and after the exit poll. So in a manner of speaking, there's a bit of profit booking after people had already bought into the news. The mid caps and the small caps, and let's see if those had a bit of a sell-off too. Not a sell-off. I think the last 4 or 5 days, mid caps and small caps have actually outperformed the large caps, and that continues. They're underperforming on the downside in the session today. But this could be a routine day. Tomorrow we could well be in the green as well. Don't quite know that. Let me talk about the large caps. Hand it over to Navneet for what's happening at the broader end of the spectrum. IndusInd Bank 5.5% higher. Z about 5.5% higher. Adani Port continues to stay where it is. The surprise move, though, as I said, is Z. There's some bit of gains in Cipla, some bit of gains in Yes Bank, which is interesting, and Larsen & Toubro about 1.5%. It's been a consensus buy call from almost everybody that has come on the channel today, at least on the technical side. On the losing end, Vedanta, yes. Amongst the heavyweights, I think ITC's put some pressure on the markets. HDFC Bank has corrected, and that's put some pressure on the markets. In all probability, this would be the top contributing stock. Bajaj Finance about 1.5% lower, and Sun Pharma about 1.5% lower. But a lot of losses in some heavyweights like ITC, HDFC Bank, which could probably be the principal reason why the Nifty Bank and the Nifty at large have looked wobbly in the session today. So not the best close despite the fact that we nudged 12,000 in the session today. Broader markets relatively resilient, Navneet.
That's right, but Neeraj, towards the end, we did see some bit of selling pressure coming across the board today. Let me start off with a couple of individual gainers. First, Bharat Financial, one of the top F&O gainers, not only today, yesterday also, after IndusInd Bank's numbers came, this counter went up, and today it sustained the gains, closing above the mark of 1,000 with gains of nearly 6%. With Z moving higher, you also had Dish TV, which saw buying interest in today's trade. That it's a beaten down counter, by the way, but still there were some gains of nearly 5 to 6%. MGL, in a downtrending market, at least in the second half, outperformed. That saw gains of about 3%. It sustained throughout the session its gains. From the cement pack, outperformers were Shree Cement, the counter which has been trading around its all-time high levels, 3% higher here, and also something like Ramco Cement, which came out with its numbers yesterday. The brokerages did give a thumbs up, though there was a bit of margin contraction seen here. Ramki Infra from the Infra pack saw good gains in today's session. The counter was locked in upper circuit, 20% gains towards the end. Also, TD Power System, this one came out with the numbers post-market hours yesterday. Good set of numbers seen, 9% higher here. And Talwalkar's was the other one, which saw gains coming by in the second half of the session, 6% higher here. On the losing side, ITT Cementation, this counter was down, some selling pressure seen, closing with cuts of about 9%. Sterlite Technologies came under selling pressure when the market started falling, 8 to 9% fall coming in here. And your Auto Ang, Motherson Suni, third straight day of fall coming by, 3.5% lower. Eicher Motor was down. Also something like Arvind, this too came under selling pressure. And finally, you've got something like Bandhan Bank that also saw some bit of selling pressure in trading session today. Actually, no, Bandhan was one of the top gainers. It's closing with gains of about 3.5%. So clearly outperforming the other banking counters in the mid-cap space.
All right, so the election day verdict for the markets is that you're down about 0.5% after making a record high in intraday trade. So nothing much to actually talk about right now, aside from the fact that you had a peak volatility, which was down in the session by about 30-odd%. Taking a look at the overall market snapshot by close, about 0.5% down. So a big move was up closer to 300 points from where it's faltered and come down closer to about 55 odd points for the Nifty. Sensex also looking equally weak. Talking about the broader market space, while we took a look at the indices, let's take a look at the market breadth, and towards the end that worsened in favor of the declines. As you can see, there were 2 or 3 touch points where you actually saw a little bit of a contraction, and finally towards the fag end of trade, it actually managed to dip below.
Well, and finally, you had the India Volatility Index collapsing in today's session after we were done with that big event. Remember, the IVs on the option side were pretty high because of this. So 29% lower, 19.5, 8 points lower for India Volatility Index. And today's fall, by the way, of course, the trading activity was heightened because of an event. So if you look at the participation on the cash side, it did go higher. On F&O, it was expected because of the weekly expiry. NSE cash turnover is almost 51,250 crores.
I would believe for the F&O also it's slightly higher.
It is on the higher side, but on the F&O side, in the last 3 to 4 sessions, I think the turnover was muted.
Yeah. So probably the pile-up of that has happened in today's session. And lastly, just the quick contributors in today's session. It actually changed, the face of the index changed a lot in intraday trade. So for the final tally, IndusInd Bank stands up at the top, 10 odd points contribution coming in. The bank still holding some ground. ICICI Bank 8 points. L&T did really well in today's session. Amongst the bigger losers, you wouldn't like to say HDFC Bank here, but ITC and the HDFC Limited too, along with Infosys, causing the big drag on the index.
Thought, I mean, we'll have to wait to see what the FI positions turn out to be, but even on a day like this, I may be wrong here, but I wouldn't be surprised if the FI number is a big positive number today. Let's wait and watch what happens.
It will be interesting. Yesterday was a sell, last 2 days was buy. But interestingly, Neeraj, on the exit poll day when the markets went up 400%, I was also checking their internals on the F&O side. Their positioning was a little bit on the bearish side. So clearly they were hedging their cash portfolios on the derivative side.
And 1,700 crores on a day where the market actually went up
400 points higher. One would have expected a higher figure than 1,700.
Let's see. If indeed everybody and all the notes were talking about how they're waiting for this big event to get out of the way, on the day, let's wait and watch what the number could be.
Surprise from the DIS side if something comes about there, because they've clearly not been participants even in the market up move. But let's get in some quick closing comments from our experts who are still here with us. Mayuresh, we're done with the election day today. Maybe over the next few days you will still see some residual impact of the election outcome. But what else is one to watch out for?
No, so as I said, I think the liquidity infusion is going to be extremely critical and extremely necessary over the next few weeks. So how the RBI manages liquidity and how the government probably supports the RBI in this entire process is the need of the hour. So I think the liquidity management tool that RBI will probably use, I think that is going to be extremely critical from a near-term perspective. The second element, as I said, I think is going to be earnings which have been mixed back and global factors which the market will play on. But in my own opinion, again, I think the markets have always ended higher in election years. So where we are at this point of time, as I said, I think I don't expect the markets to probably breach 11,100 unless something goes wrong awfully with the globe. I think we are definitely headed higher over the next 6 to 9 months. Now, stocks within the banking space, PSU banks, a little mix of the large private and the smaller private sector banks, where the infrastructure spending will be. So I think cement companies, I think these are going to be obvious beneficiaries in this entire run that probably will take place. But the mid-cap universe, in my opinion, is going to outperform over the next 6 to 9 months the large cap space.
All right, Mayuresh, we'll leave it at that. Thank you so very much for joining us this afternoon.
Thank you.
Quick closing comments from you, Jai Bala.
Yeah, watch out for crude. You don't want to see West Texas Instrument crude. You don't want it to drop below 60.05, which is a low it made on the 6th of May. If that goes below, it's actually very negative for the equity markets. There's a similar equivalent level for Brent. So and that will be also triggered for you for a place to hide. You might because it's the global demand that drives the crude prices, and it might be counterintuitive thinking. So watching that will give you a hiding place, which will be a hiding place in OMCs. So OMCs might get a tailwind of that. So watch out for this key level on Brent and WTIC.
Hadrien.
Yeah, so obviously we've seen a lot of whipsaw during this very big eventful day, but I think important levels that I'm really watching out for on the Nifty May futures is the 11,600 mark. That's the breakout zone 3 days back which happened. So I think if we close below the 11,600 levels in the coming days, I think things can get a little more worrisome in the short term, which would actually lead Nifty to make an attempt to close the 11,450 gap on the downside. So that's something very important, 11,600. Whereas a more stock specific one, the one that is really outperforming even in today's market is the City Union Bank. The stock is actually held very strongly, and I think we are seeing a very good breakout on the weekly chart. So anyone who's wanting to have a shy at a small bank, City Union Bank is one. We are seeing a good volume and a price breakout on the weekly charts. We are expecting close to 10 to 15% upside in the coming 6 to 8 months.
All right. We'll leave it at that, Hadrien and Jai. Thanks very much for joining us this afternoon. Time now to actually take another dealing room check. We've got my colleague Agam Vakil. He's there at the dealing room of India Infoline, and Abhimanyu Sofat is with him. Agam.
Well, that's right, Devina. I am here with Abhimanyu, and to take a look at what the sentiment is now. Where do we stand from here on now that the overhang is out? Abhimanyu, thanks so much for joining us this afternoon. Well, we know the verdict now, more or less. It's out of the picture. So, what is the way forward? What is your advice to clients now?
So I think so, part of the verdict was already captured in once the exit poll results were out, and clearly we saw that big rally in the market over the last couple of days. Now I think so the question is the real economy. We are seeing a consumption slowdown happening. We are seeing that there are challenges with certain sectors, like for example NBFC in terms of liquidity. So those are issues which need to be tackled because now the concern is that the GDP growth may be less than 7%. So for that, now going forward, what would be the action plan of the government would be something quite critical. We know that this government has always tried with new things, like for example demonetization, though it didn't work. It has tried with RERA and a lot of other initiatives. So the hope is that the Modi government now continues going forward to try with some innovative measures which can take us out of the challenges that we are facing, especially on the fiscal side. If you look at the combined deficit, including states and off-balance sheet items, we are close to around 7.4%. So clearly there are a lot of challenges in terms of macro, and with core inflation still slightly on the upper side of the MPC limit, I think so that going forward how the corporate earnings behave is what will lead to market going up. This quarter has not been that encouraging, unfortunately, for the same.
Okay, you actually sprung out quite a few questions. So let me begin by consumption, because you've spoken about that. There is a little bit of a slowdown. How do valuations stack up now, and what you are asking your clients to do?
So I think so valuations still continue to be expensive related to the numbers which have come. The consumption slowdown is not to do only with one factor, like for example that the funding has reduced. It has also to do with a couple of other factors, like for example in case of automobiles, you have ABS, you have insurance premiums going up. So a lot of those kind of factors are leading to lower demand, and going forward I think so things like liquidity needs to be improved. Other thing is I think so more initiatives from the government needs to be bring in order to improve the fiscal, because that will ultimately lead to private sector spending more money, government capex also going up. So I think so maybe a disinvestment. Till now we have not seen anything major happening. See, till now whatever has happened on the fiscal side, it is largely because of the petrol taxes being significantly good, because the excise duty rates had increased. At the same time lower oil prices. So that has helped. So what if oil price goes to $80-85? Then we will be in a really bad situation. So I think so the government needs to get its act together to look at these specific issues so that there is more money available for the fiscal.
So Abhimanyu, for those who want to remain in the markets but they're still circumspect about the risk at these valuations and the levels at which they are trading at, how would you peg remaining in the stocks which are a part of the Sensex or the Nifty as compared to stocks which are out of these indices?
So if you look at the index, around 40% of the weightage is to the financials. Yeah. And this year, on an average, in fact, the Bloomberg estimate also consensus talks about a 50% kind of earnings growth for the banking stocks. So for that reason, I feel that, some of the allocation has to happen to these stocks. I think so consumption slowdown and still some of the multiples being high may lead to investors not getting into those stocks right away at this price point. Maybe a better price point is something that they can look forward to. In case of small cap, mid caps, obviously the stocks have tanked like anything. And we historically have seen that such kind of price levels, stocks do tend to outperform from 1 year perspective, especially the mid-cap, small-cap stocks. So I think so it's time to now get with your list and start looking at those stocks where you see earning momentum to be quite good over the next couple of quarters.
Okay. And final question then, you'll be agnostic to sectors, it'll more be about stocks?
Yes, absolutely, because see what's happened is that there's a clear dispersion in terms of returns within these sectors as well, that one is figured out. Like for example, in case of say private sector bank, you have something like an Indusen who had its own share of IL&FS problem. They came with good set of numbers, whereas Yes Bank did not come with good set of numbers. Federal Bank came with good set of numbers. So I think that there's a clear dispersion, and for that reason I think so a bottom-up kind of an approach would be there. I still believe at lower level stock like Bajaj Finance, which have been favorite for most of the people, they should be added at every decline which is happening in the market.
All right. All right, Abhimanyu, thank you so much for joining us this afternoon. Well, there you guys have it. Well, that's the verdict as far as markets are concerned. Well, caution, now that the elections are more or less out of the way, we need to focus a little more on valuations and perhaps stock-specific stories in comparison to going and buying the market all out. On that note, it's back to you guys in the studios.
Hey, thanks, Agam. Thanks for bringing us that important update from the dealing rooms. Well, quite a different look, right? In the morning, it was all boisterous. At the end of the day, the dealing rooms are so slave to the market mood, they're all very, very quiet. But it's a dull close to what promised to be a exuberant day with we hitting 12,000 as well. So a lot of activity. But we hope you liked our coverage. Thanks so much for tuning in. From Navneet, Devina and me, Neeraj, thank you, and the team together, thank you so much for watching. But stay tuned to Bloomberg Quint Live. A lot of important election and market related programming coming up through the course of the evening.